Hello and welcome back. In this video, we are going to discuss the food and beverage division revenue presentation. So the food and beverage revenue, this is the prescribed revenue presentation for usually. So in this case, as you can see, the food and beverage revenue is divided into three main categories: food revenue, beverage revenue, and other revenue. So food and beverage revenue, food revenue and beverage revenue is consist of more than 70 to 80% of the total revenue in most of the restaurants. Now this food revenue and beverage revenue is further segmented into outlet wise. So each outlet is shown as a separate revenue. So food revenue and beverage revenue. Most of the time, this is not presented in the single P&L. Normally, we have a separate report where we are showing revenue and the covers and average check for each outlet separately. In the main P&L, we show only the food revenue and beverage revenue and other revenue. The other breakdowns are usually attached as an annexure so that we can analyze it in more details in relevance with the number of covers and average check, comparing the actual budget and last year. So the food revenue is mostly coming from the main courses, your breakfast and then lunch, dinner. All the it can further be segmented into revenue from the seafood items, from meat items, from vegetable items. So there are many ways to segment food and food revenue. So those are all the marketing reports which are usually used when we are discussing about the revenue maximization of the restaurant. Now whether there is a question whether the coffee and tea is a food revenue or a beverage revenue. Sorry for the spelling mistake here. Now the coffee and tea is considered as food revenue in food restaurants. In the bar is considered as a beverage revenue. Now beverage revenue is further we normally segment into other than the outlet we see from the soft drinks, spirits, you can see from wines, mocktails. So these are the further segmentation of the revenue which we normally see, so that we can look at the component of the outlet or the revenue. This the revenue is coming from where. Now the next category of the revenue is audio visual, so which is mostly the equipment rental charge. Usually the restaurant is charging you if you wanna use rent their audio visual equipments. Then there are function room rental charges, there are cover charges, which means you are just there is a minimum charge for the use of the restaurant. So if let's say the restaurant is rented out for 100,000 inclusive of food, meaning for a minimum charge of 100,000 spending. Now if the food and beverage spending is only 80,000, the restaurant will charge you another 20,000 as cover charges, so that they can recover their minimum revenue which is quoted. So there is a other term which is called allowances. Now the allowances are the rebates that we are giving as a to recover the service deficiencies. This is shown separately so that we can understand really the total revenue and the efficiency of operations in managing the service standard. If the allowances are very high, then you can really see you should really see what are the impacts. If we combine together with the revenue, we will not be able to guess to gauge the rebates that restaurant is giving out. The question which someone can ask is equipment rental. Are we going to record the gross amount? Because sometimes you are recording you are getting the equipment from outsources. So let's say the food and beverage some guest is renting the projector which the restaurant doesn't have. The restaurant is taking it from outside. Now if you are charging $100 from the customer and you are paying $80 to the customer, to your supplier, so how much you should record, 100 or 80? It depends on the answer to this question depends on the terms and conditions. If the guest is contacting the hotel the hotel or the restaurant directly, and restaurant is responsible for delivery of the guest and the collection of money, then it should record 100 and record 80 as the cost. However, if the customer is dealing directly with with the supplier, and the quality and the delivery of the projector is depend on the supplier and the guest directly, the restaurant is charging 20 as a commission. So then you can record only the net amount as a revenue. We have already discussed about allowances. These are all the service recoveries supposed to be recorded separately so that we can get check the efficiency of service operations. So that was all about the F&B operations. Thank you very much.